Hi, Larry Gaines, PowerCycleTrading.com. Well, in this video, I want to go over and show you some of the top chart patterns for trading. But first off, if you ever want to check out what we're doing at PowerCycle Trading, just come to our website, PowerCycleTrading.com. You can go to our upcoming live webinars and check out whatever we have coming up. So we have a lot of great articles as well on our website. So let's take a look at what are the best chart patterns for your trading, for really powerful kind of breakout trades. So we're looking for, how to spot stock breakout patterns, and I'm going to go through 5 of my top stock chart breakout patterns that I like to look for. So what I've learned from over 3 decades of trading is that really to become a good, successful, profitable trader, you first need to define what's makes a winning, successful, and profitable trade, and then second, what you want to do is create the steps involved to have that trade work over and over. So you want to put the steps down, have the discipline, then follow those steps each and every time. So we're going to start off with what I look for first, and that's based on chart patterns, and then I go into detail with my trading systems, how to trade those types of chart patterns for breakouts. So when we look at it, there are 5 different patterns. Let's go through each of them. So the 5 patterns that I've identified and look for is one, what I call the volatility squeeze breakout or volatility compression squeeze. So very, very powerful kind of coiling pattern. Then I look for the other one is a cycle high reversal, cycle low reversal, cycle low retracement reversal, and a cycle high retracement reversal. So let's take a look, and we're going to first start with a volatility squeeze pattern. So this pattern is looking for price where you've got a really tight coiled price action. So you can see here, this is a 5-minute chart on Apple, and you can see how price here is very, very tight and coiling kind of together. So what we're looking for is that kind of pattern, and then the next step is, okay, which direction will it break, either up or down? And that's where you want to use momentum to give you price direction. That's the best way I've found to give price direction, and so then we can kind of take our shot as to which, will this break up or down. So that's kind of the pattern we're looking for. Let's take a look at a few others so you can get an idea. So here's another example. This is a really tight coiling pattern on the NASDAQ 100 futures on a 5-minute chart. So you can see how tightly this price pattern is coiling. Now these dots are what we define as what we call this volatility squeeze. So I have this programmed into our indicators which pick up on this kind of pattern, the volatility squeeze. And then we look for momentum to give us price direction, either up or down. So below here are some momentum indicators that I've designed: cycle 1, cycle 2, and this one here is measuring 4 different time frames of momentum. So when you get the momentum to the upside, that's telling us the probability is that this will probably break up rather than down. So it gives us a good basis to take the trade on. Now here's another example. This is NSC, the stock. Norfolk Southern Rail, and this is a daily time frame, and on the right is a 4-hour. So here you can see that the dots, that's indicating that this is in a squeeze, and then on the 4-hour it's in a squeeze. So when you have multiple time frames, this gives a really potential powerful breakout. So you can see here it had a really strong price push to the upside. And here's another example, United Technology, UTX. So again, a daily squeeze. You can see this price consolidation really tight, and then also on the 4-hour to the right. Now the next chart pattern we'll look at is a cycle low retracement reversal. So this is Boeing. You see it sold off real hard, came down into these major moving averages. So this is a cluster of the 200-day, the 150-day moving average. So very strong support. So it's a retracement into this major zone of support based on those moving averages. And then we get our indicators, momentum again, cycle 1 and 2 going positive. That gives us a direction that this is poised to push back up. So we call that a cycle low retracement reversal. Now the next one is a cycle high retracement reversal. And this is gold futures. So it came up and spiked up into, again, this blue line. Here's the 200-day moving average. So very, very strong overhead resistance, like a ceiling to it. So it gets up here, retraces to that 200-day. And then you can see our, again, momentum down below, how it goes negative on both the 4-hour negative and the daily. So that gives you your sense of direction for this. It's a retracement off that cycle high. Next one is a cycle low reversal chart pattern. So here's gold futures getting sold off real hard. You see it starts to come down here, and then it finally starts to kind of flatten out. And again, what gives us an indication that this is a cycle low reversal is that we've got a number of different indicators we use right here. This is a reversal indicator that kicks in, and then we have an overbought, oversold indicator here that starts to push up, and then the final confirmation is our momentum cycle 1 here and 2 going positive So that gives us the potential direction for this cycle to shift back up. The next pattern is a cycle high reversal pattern. So this is on the S&P 500 SPX. You can see it had just a really strong move to the upside, and then we start getting our reversals down here. This indicators is to give us reversal signals based on overbought in this condition. You see the purple arrows, and again we have momentum starting to shift down. So you can see here on a 1 hour time frame in the daily, momentum shifts down, and so that's what we call a cycle high reversal. Starting to fail, momentum waning, and the price action starts to move down. Now the next big question is, well, how do you spot these breakouts before they actually break out? So this is where it's important to have some kind of tools that you can use to screen and look for these types of patterns. So let me show you a couple examples here. So this is a scanner that I designed, and it looks specifically for that kind of volatilities, kind of consolidation pattern. And here I can then use this over a minute time frame all the way up to monthly. But here's everything that's in a daily squeeze, and you can see here Adobe was in a squeeze for 20 bars or 20 days, and it's got green, which means the momentum is to the upside. So let's take a look at that. So here you can see Adobe here in that volatility squeeze, and then it triggers and it breaks to the upside. So that's how I can find a lot of these types of breakout trades using a scanner designed specifically to look for this pattern. So I hope this video was helpful, and if you'd like to learn more about it, please join us. We'll be doing an upcoming webinar here tomorrow night, and if you'd like all the details, just use the link below on this email, or you can go to powercycletrading.com and always find what's coming up using our site. So let me show you that one more time. So pull up our site and go to upcoming live webinars, click on that, and it'll show you what we have coming up. So we have one coming up tomorrow night, 5 winning high probability chart patterns and how to trade them. So if you'd like to join us, sign up here and you'll get the registration link, and I look forward to working with you and seeing you tomorrow night.